FOMC. My name is Piotr. Welcome to our live trading room. Risk warning. Please bear in mind that trading FX on margin carries a high level of risk and may not be suitable for all investors. You can sustain a loss of some or all of your initial investment. Please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. All right, we're done here with risk warning. Quite important. Some guys are saying that it's the most important day within 2016. Maybe yes, maybe not. But be careful. Be careful trying to treat this day as so important. It could froze you at some point. So yeah, it's a Fed day. And that's it. So most probably, you know, guys, we are gonna to have a look on dollar crosses. We are gonna to have a look on dollar pairs. Of course, within the next 30 minutes, we have some data. We have like retail sales, right? And we do have PPI. Retail sales, the expectations are weaker. PPI, market is expecting a little bit better, with core PPI much better, let's say that way, right? Don't think so the PPI will be that important. I would say that CPI tomorrow gonna be worth to watch. Of course, Yellen knows all the numbers, and yeah, we are gonna to get something out of it later today. The market expectations are 25 basis hike, with at least 2 more in 2017. I saw some guys are trying to play it down, saying no, they're not gonna be the hike. Me personally, I'm with the opposite block, right? I'm somewhere my conspiracy theory saying that might be 50 instead of 25, right? We'll see. Okay. Let me have a look. Guys, if there are any questions, anything we should discuss before we start. So basically, the purpose of our meeting is to go through dollar charts. Okay? The purpose of our meeting is to go through the dollar charts. Of course, we are gonna wait for US data. Our meeting is we are gonna to stay around 1 hour, maybe a little bit longer, if there is any need to answer the questions. So Fed, CPI tomorrow, Bank of England tomorrow, but okay, so let's explain what we have. So right now we are waiting for retail sales and PPI. Then we have a crude oil inventories, and I'm bearish in oil. Actually, we are going down. I'm not trading oil that often, right? I'm gonna show you if there is a time. I'm going to show you oil chart. Of course, evening, that's the FOMC. Then Tokyo session, that could be interesting from the Aussie perspective, because we do have unemployment rate out of Australia. So maybe finally we are gonna to hit our selling zone. Then we have Swiss National Bank tomorrow at 9:30 a.m. CET, and that's gonna be very interesting. And I like to see Swiss franc weakness, and I'm gonna to show you. I've got somewhere here the Swiss franc. Yeah. And then of course PMI in Europe, then Bank of England, and another currency I would like to see weakness soon. There is still a little bit to the upside. I think not the whole job been done to the upside. We are gonna to go through, right? Then we've got the manufacturing sales out of Canada, CPI, out of US, Philly Fed, out of US tomorrow. Okay. And Friday, Euro final CPI and building permits out of US and triple witches, right? So some kind of expiration time this Fridays, right? Futures, options, all those derivatives with time expiration, so it's time for them, all right? All right, so that's it. If we are talking about the calendar. So, any questions? Okay, no, not at all. All right. The easiest way, guys, is to start with Aussie. And let's do that way. That's the daily chart, and we all know the daily chart. All right, we were discussing the daily chart a few times already. Something like up to 75.85 on daily. All right. So there you go, basically based on this here, 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 here again, and again, and maybe again, boom. All right. Then we also have this supply, possible supply. We never know. We are not behind. Okay. Then what we were discussing was some simple approach, simple measure. This one and that one. Let's make it bolder, right? It's here. There you go. Okay, so in the medium term, everything towards this zone for me is short. Okay. I may change my view with the daily and weekly close above. Second day close above will confirm. Second week close above also will confirm the dollar weakness versus Aussie. All right, but as long as we are below, that's my selling zone in the medium term. What's the target? That's the first one. So something towards 72.50 as the first target, all right? 72.33 to be precise, but 72.50, let's say. All right, so that's what I'm looking for on Aussie. As we are not gonna, so I'm looking to sell above 75.40, right? If you following if you're following Twitter, then yesterday I sent out my my order is a limit to sell at 75.45, stop bid 75.90, targeting 72.50. All right, I'm risking 0.25 here. Okay, so that's Aussie. That's the Aussie story for me for now. So let's go. Let's switch to Swiss franc. Let's switch to Swiss franc. That's the weekly. Let's switch to daily. There you go. That's the daily. That's daily to the downside. And taking into consideration only the interest rate differential, if you think that with US hike there are not gonna be I don't know how to call it. There are not gonna be like financial crisis, especially at the beginning of 2017. Nothing like this gonna happen. No turbulences. Maybe some kind of the correction on the stocks, and then the normal stuff, right? So if you are not predicting any kind of the, I don't know, domino effect on the stocks, stuff like this. So then you may consider the Swiss franc weakness as almost top trade for 2017, right? Swiss National Bank on Thursday could be the key, as we are going to get a few hints, right? We may see strength of the Swiss franc into that event. That might be. But how I see the things here on Swiss franc, I or we can assume this stuff here as a consolidation, right? This stuff here, we may assume it as consolidation, right? Now we broke out of this consolidation. Of course, we are testing the supply based on the daily supply. We have some weekly zone within that supply as well. So some kind of the profit taking from that zone we see right now. There is nothing extraordinary, right? That's something natural here, right? Especially if we are going to take into the consideration how we are reacting. There is no strong move to the downside, boom, right? Like we hit supply, a lot of orders to the downside, a lot of selling orders, boom, immediately retesting the top of this consolidation. No, guys, look. Not bad behavior right now. The thing is, what we may see from the bear's perspective, and I'm gonna to talk about this within a minute. All right, let's finish the possible view from the bull's perspective. So if we assume that this is the consolidation, this is a breakout of this consolidation, all right? So then again, the simplest measure is to try to double this consolidation, right? In that case, that's the possible target, 0.370. I would say with good speed we could hit even 105, right? One more thing from the psychological perspective is we are above the parity here, all right? So there are, I would say, two ways. We may see a little bit stronger pullback towards Fed, after the Fed, and towards the Swiss National Bank event, all right? And then continuation to the upside. That's the first scenario. The second scenario, why I do expect eventually some kind of the pullback on dollar after the Fed, because I'm counting for 12-24 delay with 0.25, right, hike, and neutral or dovish statement. Maybe neutral with, that's the wider expectations, right? Okay, hike, some neutral or dovish stance. My point of view is a little bit different, but then we have to be ready on every occasion, right? But with this type of the approach, I do expect some dollar sell-off, and I'm gonna to tell more about that when we are gonna to talk about the dollar index, all right? So the first possibility on dollar Swiss franc, a little bit deeper pullback towards the top of this broken consolidation, and then really that would be that might be easy trade, all right? It's gonna be a little bit more complicated. We may see a little bit more complicated stuff if we are gonna to go straight after the Fed. We are gonna to close above this daily supply. Then we have to remember about this stuff a little bit higher. Then we need to hold this supply, the broken supply. That's gonna be some kind of the fight here before the Swiss National Bank event tomorrow, and finally we may see huge rally. All right. It depends what we expect, what may happen, because right now it's not this big pullback, right? So we may see the bigger move to the upside. If the bears are trying to sell, a lot of shorts might be made a lot of shorts is building around this level. So without a deeper pullback, if we are gonna to try to squeeze those shorts, that could be quite a nice move to the upside. All right. Now, from the bearish perspective, we are within the daily supply. We have some zone based on the weekly chart here as well. All right. And we try to make a breakout out of this consolidation, and we're trying to target 103.70. But what bears may try to do here is what you see, this kind of the first pullback was not great. We hit second time the zone, and we are trying to make a pullback, and we may try to, from the bear's perspective, we may try to build this double top M formation. All right. So again, based on this, the first target is the top of this consolidation, and if we are gonna to get back inside this consolidation, then guys, something bigger may happen. We may go and try to trade towards the bottom of this consolidation. All right. And if that's gonna happen, market and we are gonna to treat this breakout as the failure. All right. All right. In that case, what we have to do, we have to double this consolidation to the downside, and in that case, the bears may try to target 90. All right. So taking into the consideration that we are around parity right now. All right. So to the upside is something like 105, 110. Talking about the round numbers in a medium long term, and if we are gonna to fail, at parity, we are gonna to get back inside the old consolidation. Then, guys, 95 as the bottom of this consolidation. All right, and then 90 as a natural target below parity. All right. I'm not saying it's not possible, but then this type of the trade is possible if you think if you think about some catastrophic events. All right. Maybe before the year end or right at the beginning of 2017. Okay. So that's my point of view if we are talking about the Swiss franc. Rather, for now, I think we are gonna to try to squeeze those shorts from here to the upside. So 105, 110 dollar Swiss franc, and as you know, I'm still bullish on dollar, and I'm gonna be bullish as long. Now, let's talk about the dollar index. I don't have a chart here. But we were discussing many times. Right now, dollar index, based on the weekly chart, that's what we have to hold on a weekly close. On a weekly close. So, if we are gonna to see again, we are above on Friday evening, right before the close, that we are above this level, that's fine. Last week we went even below 100, but dollar bulls managed to close above. That's what we may see again this week, right? If we are going to see neutral dovish statement after the hike, then some guys may try to sell the dollar, but I think that strength of the dollar is going to be delayed by 12 to 24 hours, and that could be I'm gonna to make an update on Twitter, but that could be buying opportunity, dollar buying opportunity. That would be the best way to respond to the dollar sellers. All right. of course, we need the weekly close above, the best way above 170, right? But again, above psychological 100. So that's what we are looking for, okay? And if we are gonna to close above this level, we have like around 7% potential to the upside, because the target is around 108 based on the analysis we did. And of course, the easiest way is to visit our blog and check the analysis, check the latest updates of dollar index I did a week ago or so. Okay, so still, as long as we are with overall, when we are talking about the USD, as long as we are above this level based on a weekly close, I'm very, very dollar positive. So that's the way, in that way, trying to express my view. I'm gonna try to trade long dollar, right? Okay, so that's USD Swiss franc. Okay, we have 4 minutes. We have 4 minutes to go to check and see what's going to happen after US data, right? Even 3 minutes. So let's wait for US data before we'll go through euro dollar, dollar yen, and pound USD, right? Okay. Okay, USA. Questions? Good, is all clear, so that's okay. Hmm. 2 minutes. Waiting for, we are waiting for US number. I'm checking other charts. Okay. Euro is a little bit stronger, trying to hold above 106. We'll see within a second. Those highs, for sure we have some stops above, and I think even with, we do expect the dollar is gonna be stronger, then I think we are gonna to hunt for those stops and eventually then lower, right? Thirty seconds. Ten seconds. And there we go. Market is trying to sell dollar, and dollar is under pressure before the FOMC, so that's not surprise for me. That's not surprise for me. Okay. But see, every dip on dollar, market is trying to buy every dip on dollar. We'll see if that's gonna to stay. Okay, final PPI for November, huge beat, plus 0.04 versus plus 0.1. Okay, X food and energy plus 0.04 versus plus 0.2 estimate. So that's really huge beat. But the retail sales weaker what market was looking for. All right, plus 0.1, plus 0.3 expectations, and plus 0.8 previous one. All right. And within the sub indices are weaker as well. So retail sales on the weaker side here. So that was the sell-off on dollar was most probably related to this weak number. Not sure, guys, if you've seen the reaction yesterday into the option expiration at 4 CET and then into the fix. There was a demand, dollar demand. Seen pretty much everywhere, maybe not on euro dollar. All right. And that's the thing, because we are going to discuss euro dollar right now, and that's the thing. If you have a time before FOMC meeting, just go through the daily charts on other euro crosses, not only euro dollar. Go through, I don't know, euro pound, euro Aussie, euro JPY, euro Swiss franc. We are close to very important levels, and that could be the reason if we are talking about the FOMC with let's say I don't know, neutral dovish statement. The first initial reaction, it could be maybe dollar strength, but not across the board. It might be with some currencies, and we may at the same time see euro rally with those currencies like euro Aussie, maybe euro pound. Don't expect any big move on euro Swiss franc before Swiss National Bank meeting tomorrow, but euro Aussie and euro pound, both Aussie and pound, I do expect more weakness to come. With Aussie, every kind of the number is weak. If we are going to see a little bit stronger job number later today during the Tokyo session, that might be good selling opportunity, right? We'll see. Right now, what we see is a dollar weakness after the data, and that what may persist until the FOMC decision and statement. Okay. So. Euro dollar. All right. Still, what's the important thing is this kind of the consolidation. Let's make it round numbers, all right? 105, we know that 104.60 is the low, and then around 115, we know that based on the weekly closes, it's we are talking about 1450. But this consolidation, round number 10 figures, right? And we do expect the breakdown here. So the final target, I'm not saying it's gonna happen right after the FOMC, but we are talking about something around 0.95 basically from this consolidation. The move to the downside, consolidation continuation, 0.95 should be the final target, right? And that's sounds great, everything is fine from the euro-dollar bears perspective. What I also mentioned a few times was this kind of the consolidation here on the left side after strong move to the downside consolidation, and everyone was expecting continuation to the downside. Instead, shorts were squeezed to the upside, and we had this huge move to the upside. So it's something we should have in mind, we should remember about. Not trying to be like, you know, blindly focused on the downside only, all right? Because then we market reaction to the opposite side may hurt us a lot. So we have to be very careful. Of course, we may say that it's different times, the Eurozone is in a different place, US is in a different place. So yes, agree, we should see the downside. And that's the core scenario. That's the core scenario for me. So from the euro-dollar, from the bearish perspective, what we don't want to see before the week end. First, we don't want to see daily close above 750. All right. If you are still swing short euro-dollar from our ECB live trading room. Swing short on a break of 107.16, as far as I remember. I didn't take it as you remember, but if you are short from 107.16, we were talking about the stop, about this ECB spike here, all right? If I don't know if you decided to take something out of the table, if no, definitely you may try to lower it towards 780 or towards 780. So you are lowering your stop by around 100 pips to the downside. Still, you are targeting at least as a first of the target, as we were discussing, 3 to 1. So you are targeting still something around 103.50. And now with very strong FOMC statement, right? With very hawkish statement. The parity around the Friday cannot be ruled out, all right? Of course, we all know Yellen. Most probably, it's not going to happen that we are going to get a strong hawkish statement. Maybe she had a discussion with Trump already. And maybe that could be the case, some conspiracy theory here, right? Then that's gonna be one-way ticket. But by the way, let's try to get back to reality with euro-dollar. All right. So we don't wanna see the close above 770 on a daily basis, right? That's what we don't wanna see. From the bearish perspective, all right. So that's how the daily chart looks like. Let's get back to intraday charts and let's try to get an idea what we may expect then. Still think that, as I mentioned before, those highs yesterday, today high, they are gonna be squeezed, those shorts, the stops above, and then we've got the chance to see the rally towards 697.15, this swing breakdown based on which I mentioned about the possible shorts during the ECB events, right? And with neutral dovish statement, we may see the rally toward 107, even 107.15. And if I'm correct with this 12-24 hours possible delay with dollar reaction, we may expect some dollar strength from that level, and that one of the way, if you want to express your view, you are dollar positive and you want to express your view to the downside on euro dollar. All right. Next thing is, it's gonna be tough. It's gonna be tough. Really, if we are gonna to see a dollar positive move immediately after the statement and rate decision, it could be very tough and tricky to try to join the party on a gap to the downside, on a move to the downside. So that's something I'm going to try to update on Twitter if there is a time, of course. But you don't want to try to sell something around 105.30 and below towards 104.60, because that's the strong support zone, right? And you don't want to sell into the support. What you want to see, if you are looking to sell the dollar, what you want to see is to move to the downside, strong break through the 104.60, right? And you want to see the pullback, but the pullback you want to see has to be some kind, with plenty of corrections around, right? So on a smaller time frame, every move to the downside has to be corrected, and this demand has to be eliminated. Move higher, new demand, correction, elimination, higher. And we have to retest 104.60, 105. Most probably the latest demand, it's not gonna be corrected, right? The shallow correction, and we may see double top, so some M formation within the 104, 104.60, 105, and that could be the best way to try to join the party on Thursday and Friday, with the possible move towards 103, 102, 101, and finally parity. Depends on the how market is gonna to what's gonna be market takeaway from the FOMC statement. All right. So that's the second possibility to try to join the move to the downside. All right. But if you are a bull, euro dollar bull, and if you are an overall dollar bear, then the easiest way, of course, if it's gonna happen, the easiest way to try to sell dollar would be, doesn't matter what kind of the statement we are gonna to get, there is a one-way strong move to hit all those stops between 105, 104.60. Then, because of those stops, we may hit 104.40, maybe a little bit below 104.40. But what you are gonna to see is gonna be immediately move back above 104.60, better above 105 than during Tokyo session, maybe during European session tomorrow. Market will try to push lower again, but it's not gonna be able to make any kind of the new low. We may retest 104.60 max, and then the rest of the Thursday, the whole Friday, you are gonna to see just one-way move to the upside. On dollar index, we are gonna be well below 100, and that's gonna be the easiest way to try to sell the dollar. All right. A little bit tougher it's gonna to be if we are gonna to close the day above 107.50, 107.70, something like this, because there is a possibility we are gonna to see the pullback towards 106.70, 106.90. And I don't know if it's gonna to be like whole Thursday and then Friday boom, something like this. or if it's gonna be like this, only the shadow to the downside and then boom to the upside, right? So if we are gonna to see strong close today, wait few pips above that close and try to join the party, or look for pullback and price action on a smaller time frame to try to join the party to the upside, right? But still, we may see strong close today, but remember what I mentioned, this 12-24 hours dollar delay could be in play as well. But that's gonna be visible what they wanna do, in my opinion, and I will try to tweet about it. Of course, the hardest for us, from our as a trader's perspective, is gonna be one-way move immediately after, without any hesitations. So every pips higher or lower, that's gonna be tougher for us to join that party. What we want to see some kind of the hesitation, right? We would like to see the initial move as a wrong one. Okay. Then the trying to join the party is gonna be much easier. Dollar yen. Really, I'm waiting for some kind of the spike to the downside to try to join the party to the upside. Let's start with weekly. All right, let's start with weekly. Right now, what we have on weekly chart, market is trying to hold. Market is trying to hold the high we made 2 weeks ago. All right, so that's where we are fighting on an intraday basis, as you may see here on 30-minute chart. Every time we're trying to go a little bit lower, right, there is a reaction. Right now, looks like we are trying to make a breakdown, but I wouldn't be surprised. To see the stop hunting just a little bit below 1480, and again to the upside. Boring stuff. With this type of the action, be very careful. You don't wanna because we had, as you can see here on weekly, let's get back to weekly, we had this strong move to the upside. So the healthy correction, at least towards 1010, would be good from the market perspective, all right? But this kind of the correction would need most probably the whole dollar. Most probably are going to see the whole dollar correction, and then a dollar index would move. There is a possibility dollar index will move below 100, and that's not something you want to see if you are dollar positive, right? So it could be that we are going to miss the dollar yen trade, because it's very hard to join right now, and with tight stop. That's the way I wanted to explain. Basically, because this stuff, so that could be some kind of the stop hunting to the downside. Eventually the way you wanna join it. Oh, and we are reacting right now, as you can see. The way you may try to join it, there is a possible, if I'm not mistaken, this high 2 weeks ago we made on the weekly chart. I saw you that could be this middle line of this mega from here, and that's the reason market is trying to hold this line as well, right? So trying to be patient. This time what you may want to do, This time what you may want to do, if we are going to hold this midline of this megaphone right here, right? So we're trying to make within this period of time, we're trying to make lower high and trying to make a little bit of lower low, lower high, lower low. So market is trying to show us that they want to make a change, right, to the downside. So I don't know how deep move to the downside could be, all right, but let's say we are gonna to see this move towards 114 something with strong rejection here. Not sure if it's gonna be possible to join the party, but then what you may wanna see is to move back above this line, retest. We need to hold this line and continuation to the downside, going to the lower time frame. That might be the case this time, to try to use any kind of the price action, to try to join the party. The first visible demand here on 30-minute chart, it's around 114.50, right? And the second one is a little bit lower, towards 114. Okay. But taking into consideration those two intraday highs, consolidation and higher, this zone could be very interested. And if we are not going to touch that zone before the FOMC, it might be that we are going to see the spike only here, right? So if your plan is gonna to place an order with stop below, that's also very dangerous, because if we are wrong and we are gonna to see huge gap to the downside, then you are gonna be filled by the broker, right? Your stop is gonna be here, but your stop is gonna be filled at the first available price, so you are risking huge slippage. That's why you don't want to place your order before FOMC based on this intraday zone, right? Just to avoid the slippage if we are going to see strong dollar sell-off. So in that case again, we may see something like this, some kind of the action. The line is going to be lower, move back above the line, some kind of the price action continuation to the upside. All right. Also, we may try to make the measure, and as you see, the second zone could be the target based on that, based on this measure, right? So bulls are trying to, but most probably is that the most danger, dollar yen is the most danger pair from the dollar bulls perspective, all right? If you are a bear and you are looking to sell, let's get back to weekly. If you are looking to sell, what you have to be aware of, that we may see Riley a little bit higher towards 1670, and I'm talking about this low here and this low here. So you may check on your chart, and here the breakout. All right. Similar price, if you want to sell, you want to see similar price action as I explained on euro dollar. So what you want to see here is, doesn't matter what's going to happen, you want to see the rally, you want to see the stop hunting above 116, rally towards 1660, 1680, and you may want to try to sell either rally toward this level, or after the stop hunting, okay, after the stop hunting, you may want to wait to see for pullback below this high. Market will try to rally back above 16, and that could be your selling level of dollar yen, right? That's how I see. If we are talking about the both scenarios, bulls, bears, that's how I see dollar yen. And finally, the toughest stuff, pound USD. Okay, based on the weekly chart, still we may see the spike towards 29. Before the final move down, and I think 120, that's the first level, but we are gonna we got a chance to see lower levels in 2017, but that's something we will discuss during our live trading rooms next year. There is a time to analyze the weekly, but right now you shouldn't be surprised if you are gonna to see rally towards 28, 29. But still lower levels are possible. On daily, that looks a little bit different. All right, we are trying to hold this 27.90, 28, this supply. So what we did right now, move higher, break down, so we consume this demand. Now higher, consuming this demand, trying to make possible M formation and move to the downside. That's all about how the market will approach and how the market wanna try to trade dollar after the FOMC decision and statement. I see pound on lower levels, and based on intraday price action, we are testing some supply right now, right? And the next possible supply is around 27.40. That's what we may see before the FOMC, all right? And if you think, as me, that overall FOMC is gonna be dollar positive, you don't wanna see the daily. We may see the stop hunting, right? But you don't want to see the daily close. You don't want to see the daily close above 28, let's say, today. Okay? So any kind of the spike, and then you can switch to lower time frame to see if you can join any kind of the price action to the downside, right? In case you are a bull on pound, from my perspective, the only way is to try to buy on deeper pullback towards 25.50, 25.00. So again, you want to see this last stop hunting, right? Market may push prices lower to try to invite other sellers, uninformed sellers. So intraday stops are going to be taken out, and something around 25.50, 25, and that's where we may want to see the turnaround. And if we are gonna go immediately higher, I'm not gonna be involved on the long side on pound. Okay. Questions? I think we discussed important things. I think we are ready for FOMC. Important thing is don't try to chase the prices immediately, right? Remember there is a half an hour. Of course, they may make decision right after the FOMC decision, right? But remember what happened during the ECB, okay? Don't try to chase the first reaction. If there is a time, I will make an update on Twitter. All right. I'm sorry if it's gonna be too busy and I'm not gonna be able to answer. But again, be careful. Don't try not to be trapped, and then everything should be fine. Always remember our ECB event, what we did during our live trading room. We missed this move above 830 and closed below 830, and I said I'm sorry, and it happened, right? But then we had two another chances to join the party, and the same is gonna be this time. We may miss first move, but be patient and don't try to chase the moving market. That's the worst thing you may do, especially today. All right. So guys, that's it from me this year. That our latest live trading room related to what's going on the market. I'm going to check today, tomorrow, Friday, how market is doing. Of course, I'm gonna to watch the market, how market is doing, and I will decide early next week if we are gonna to have some workshops, as we discussed a few times, late in December. If yes, then of course you are gonna to get the invitation. Of course, I'm gonna to inform you. So basically, the workshop is gonna be like discussion about the basic stuff, what I'm doing, how I'm doing, not charts watching and trading, but basically trying to explain every kind of the aspect, right? Because there is a lot of things, a lot of nuances, and it's gonna be good for you to know. Sometimes I'm using some shortcuts, right? And you may not know what I'm thinking about, and you may be so shy to ask. I think the workshop is gonna be the best way to ask everything related to what I'm doing during live trading room. Okay, so that's the first thing. The second thing, as I mentioned, that's our last live trading room this year. So I'm taking this opportunity. I would like to wish you a happy holiday season, right? Be good and have a lot of fun during the New Year Eve, okay? Enjoy this time, because then from the very beginning of 2017, that's gonna be only hard work again. And I wish you in 2017, I wish you a lot of green peeps, all right? So okay, that's it from me, guys. Thank you very much. If there are any questions, that's right time now. I'm gonna to stop recording right now, so I'm gonna to upload this live trading room. If there is a time, I'm gonna ask colleagues to upload. It's gonna be visible most probably before the FOMC state, if you wanna go through and check again.